Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the charts behind me, which are of a few penny stocks that I did want to go over. I got a lot of requests for them, and these three did stand out. So I just wanted to go over them and also note that what I go over is applicable to other stocks. So I do think that it is useful whether you're interested in these particular ones or others on the list here. So hopefully this is helpful. And so to get into the tickers, the first one that I'm going to go over is Barnes & Noble Education, ticker symbol BNED. And so the reason that I wanted to go over this is not because of this big move that we saw yesterday up to $1.35, breaking out of the penny stock territory, but actually because of this retracement that I had drawn here. I do think that there is a good lesson there that could be applied to the pullback we're currently seeing. So I'll go over that in just a second. Just going to adjust the y-axis here so we can look at this Fibonacci retracement a little bit closer. And I should note that I am recording this on Thursday, May 23rd, during market hours, so the price of these tickers will be changing. And currently, Barnes & Noble Education is down almost 37% on the day, right around a price of 71.5 cents. Anyways, though, getting into the chart, we can see this Fibonacci retracement that I drew from the low here that was hit on May 13th, going up to the high hit on May 17th. And I did note in the video that I put out on Sunday covering penny stocks that I was expecting a pullback to the 786, which was at a price of right around 25 cents, or here precisely 24.75 cents. And we didn't get that. We did get a pullback though to 26 cents, so pretty close. But one thing that I could do to adjust this Fibonacci retracement is rather than going from the low hit over here, I could do it from the low hit on that day. So just going for the range of trading that day. And so the low on the 17th was 17 cents. So I'm just going to adjust this retracement rather than from 15.15, which was the low. I'm going to do it to 17 cents, which was the low on the 17th. And from that, we see that the 786 is actually, it was hit. That 786 level with this adjustment is at 26.2 cents, and that marked pretty perfectly the bottom here before a massive run up. So I do think it is good to be considering retracements and key levels that price might be returning to, so we're not chasing, not FOMOing in at the top, because that can be very risky. Money can be lost and never returned with stocks like this, so good to be exercising caution and being careful. But anyways, kind of applying the same thing to this recent run-up that we saw between the 21st and 22nd. I'm just going to do another Fibonacci retracement from 26 cents up to 135. And so we can see that full range. And looking at that, just going to lock it in place so it doesn't move. I actually can't zoom in anymore because, it's been so volatile recently. And so looking at this, we did pull back to, let's see, almost the 786, which would be at a price of 49.33 cents. But we did pull back to, and we are currently trading above the 618, which is at a price of 67.64 cents. So maybe that is respected as the level. It also does look like it wicks down below the prior high at 60 cents, hitting a low so far today of 54.7 cents. So maybe that was a great dip buying opportunity, as this prior resistance will then be acting as support. And so maybe we see another leg up. And so with that being said, just want to draw this as an example. If one were to have bought the top at 135, currently that person would be experiencing about a 50% drop in their position. And so, it sucks to be buying the top and having to deal with such pullbacks. And I can do that again from the top here, going to the pullback down here. That's over 50% pullback. So, the gains could be maximized. So if you were buying the top then, going up to current price, that's only about a 15% gain. If did not sell the top yesterday, that would have been, 120% swing. But, if you don't sell the top, or if you're buying at tops, that is not as good of a swing. So that's about 120% if sold the top yesterday. But if I had bought the dip on this pullback at right around 26 cents, that would be, a 400% swing. And even up to the current price, that's still over 150%. So I do think it is good to be patient with these penny stocks if there is an imminent squeeze. Maybe it doesn't matter that you bought at 135, but a swing from 70 cents or maybe even 50 cents is much better than having to endure these pullbacks. It's better to take advantage of pullbacks than to have to endure them. And so on that note, having talked about Barnes & Noble education, I am going to switch over to Ascent Solar Technologies, ticker symbol ASTI, which is up about 100% today. And so this does represent, kind of a risky play right now because price has rallied so much, also leaving this gap to the downside, filling it, getting to the close of yesterday. That would be getting to a price of around 13.14 cents. And so that's pretty much a 50% drop from current price. So, like what I'm talking about, this is getting pretty risky, but maybe it has found support. It is above the 382, right around 25 cents. Maybe that holds, but maybe we do see a pullback. And I do have these two downtrends that could be acting as support. And maybe we did see that today with a open just below this top downtrend. And so the open was at a price of 21 cents. Maybe that was a great dip buying opportunity, but maybe we do pull back to the 618, which is at 19.38 cents, or even better, the 786 is at 15.41 cents, which is just above the high from yesterday, which was at a price of 14.75 cents. So, is this going to continue higher? I have no idea. But if one is to be chasing or wanting to get into this play, I feel like waiting for the 618 is a better position to be establishing than buying right now. Maybe you miss it, but there are other trades. So I wouldn't sweat it. I'm not sweating it. I'm not involved in any of these penny stocks, but they are fun to cover because they are so volatile. And, I could see this going up to the bottom here around 38 cents. So from current price, that does represent a 40% swing, so maybe that is good, but waiting for the 618, that would be representing, 100% swing. So I do think it is good to be patient. I do think it is good to wait for pullbacks if you're late. I think it's good to wait. So that's what I would be doing if I were to be participating. And also I should note that with Barnes & Noble, where could I see this going? Where's the next level of resistance? I could see it getting up to 226, as this was the resistance here, could be resistance again. But maybe, right around 165, where there were some tops over here, also could be resistance as well. And then the final ticker that I'm going to be going over is Crown Electrokinetics Corporation, or ticker symbol CRKN, the Kraken. This has been pretty popular. And so the reason why I wanted to go over this one is because it has had a massive pullback, having hit a high on the 17th of May at 60 cents. It's now trading below 13 cents. And so doing a retracement from the top, that means, that's enduring about an 80% loss, an 80% pullback. So good to not be chasing, good to not be buying tops. Always good to be waiting for pullbacks. And I do think with Kraken, we have seen a very nice pullback, actually going back further than the 786. If I do adjust this retracement though, let's see, to the low of the 16th, which was at 6.5 cents. And we can see that from this low to the high here, the 786, that actually moves it up higher, right around 18 cents. So this is a pretty great discount. Could we see a full retracement to the low on the 16th of 6.5 cents? Yes, most definitely. And that would represent, a 50% drop in price. So pretty risky there. And if we do return to the lows at 4.14 cents, that is, that full range there. The 786 is right around 16 cents. Current price is below that. So I feel like of the three that I've covered here, that Kraken seems like it is the best for the next leg up, the next rally. I do think that ASTI is due for a continuation to the downside, that we might be seeing a pullback. So pretty risky right now. And Barnes and Noble, I do think this could also be pulling back some more too. And I do think that this represents good examples of why it is good to wait for pullbacks, because you could be making a lot more money that way. And so with Kraken, I feel like this one could be the next to run, but it could also be the next to drop 50%. So do be cautious with it. Like I said, I am not partaking in any of these, but they are fun to cover. So thank you for the requests. And those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.